the market isn't dumping, it's been rotating. And with the government shutdown ending, I found the sector that Wall Street's been hiding in, so I'm not going to waste your time in today's video, because today we're going to talk about Johnson & Johnson and Eli Lilly to see how far this move has left to run. So let's go. Hit subscribe and turn on all notifications if you're ready to max out your returns in 2026, and check out the other stock analysis videos that I have on the channel playlist. Let me know your comments below and what you guys like to see next. There was big news that came out recently for Eli Lilly. They're going to be able to sell their obesity medication to Medicare patients, and that's really what's propping up this market right now and where I'm spotting a sector rotation. If we look at the XLV index and scroll down to see the member weightings, Eli Lilly and Johnson & Johnson are the majority of the index, followed by ABBV and United Healthcare. Looking at a time series of XLV, it's done really well recently. It's up 13% over the past couple of months. And for context, if we plot the SPY, which is the overall S&P 500 in blue there, you can see that XLV has actually inflected and is actually performing better versus the overall market. But I think it gets even more interesting because if we take XLV and we divide it by the S&P 500, we can see a time series chart of what that has looked like over the past couple of years, and notice that there has been a bounce on the right hand side of my screen. But what I find really interesting, if we scroll all the way out here, I have this red line at the bottom there. We're reaching the same relative valuation. Again, we're taking one index and dividing it by another to see the price reaction between the two. It's at the exact same level all the way back in 2000. So this is, in my opinion, a very generational moment right now, where XLV has not been at these levels historically. So we know the overall index of XLV has been going up recently, but the focus of this channel is to identify the best opportunities across the market right now, and that's exactly what we're seeing. Specifically in the pharmaceuticals, we could see Eli Lilly as we continue to discuss them. Johnson & Johnson has done really well if we see the chart in the center of the screen there. ABBV is another good one, still sticking with that top three in the pharmaceuticals, but more specifically, we want to identify who's also not doing very well. It's not every pharmaceutical player doing good right now. If you look at BMY, they're definitely lagging. And continuing on here into a subsector of the healthcare industry, which is managed healthcare, United Health, they haven't done well at all, and everybody knows the story that's going on with them recently. And another similar competitor in the managed healthcare space is ELV. So it's not the entire index that's doing well, it's more specifically that pharmaceutical space. So we identified some sectors that are underperforming healthcare right now, but if we look more broadly at earnings estimates, we can see in Q3 of 2025, which is the most recent go, the healthcare sector has actually performed the best out of all of the S&P 500 sectors, with 93% of companies on the left-hand side of your screen there reporting earnings above analyst consensus. And that compares to 82% of the overall market. And you can actually see this is really interesting because it's actually doing better than information technology, which is a company like NVIDIA and other AI names right now. So healthcare is doing really well. And these companies aren't just posting good numbers that are above expectations on the quarter, but they're actually coming out and they're raising their full year forecast as well. If you look at Johnson & Johnson's latest release, they stated that they're going to raise their 2025 outlook. And similarly for Eli Lilly, they also raised their 2025 guidance. But I want to focus on two specific catalysts for why I chose these stocks today. If we go back to Johnson & Johnson, they have a big momentum shift right now where they're actually separating and spinning off their orthopedics business. So really what they're doing is they're separating the lower growth business, spinning that off, and they only want to focus on the best performing sector of their business. And I find that story really interesting for Johnson & Johnson because they actually did something a couple of years ago where they separated their consumer segment of Kenvue, which is in the green line there. That is the segment of the business they actually divested, and in the bar chart on the top hand side of the screen there, that is the Johnson & Johnson share price. So it actually worked out really well for them as they separated their slower growth line of business. It actually diverged from the rest of the business, which has done incredibly well since then. So this is why investors are getting really excited, because they're starting to see that as they focus on that higher growth side of the business, that potentially they might see more outperformance and that multiple re-rate higher into a higher growth stock. And it's well known that Eli Lilly is doing incredibly well right now, because you can see this chart is just absolutely insane from the presentation. They're looking at Mounjaro and Zepbound, two of their obesity drugs that have just been absolutely smashing expectations and are only continued to grow into the future, which is why they raised their sales guidance. So those are good fundamental reasons for why the stocks continue to go higher, but I want to know what Wall Street is thinking as well. So if we compare the top line revenue estimate for Eli Lilly here, you can see on blue, that is the next 12-month earnings estimate for top line revenue, which has really gone parabolic over the last couple of years. And you can see if we actually drill in here, looking at the next 1, 2, 3, and 4th year estimate, you could see on the right hand side of the screen is actually forming a bit of a tail, which is good news because as the stock continues to go higher, as management raises their expectations, Wall Street is playing catch up. And looking at the estimates for Johnson & Johnson, you can see the top line revenue estimate as well. There was a big step down back in 2023 because of that Kenvue business that we just discussed being divested. But more recently, they did have earnings estimates climb over the last couple of years, even though they did divest a couple $1 billion in revenues. Revenue estimates on the right-hand side of the screen there have been relatively flat compared to Eli Lilly. And I think that is mostly in part that because they just announced that they're spinning off another $10 billion in revenue from their orthopedics business that's being separated, I think these estimates may come down, but it's not because the business isn't performing well. It's just a matter of the fact that they are actually doing a divestiture here. So that's good context for what's priced into these stocks right now. If we have a look at what Wall Street is thinking, the average forecast for Eli Lilly over the next 12 months, it's already well above that. And if we look out to the highest forecast, it's at $1,200, which would put it well above a $1 trillion company. And shifting over to Johnson & Johnson, the estimates for that look good as well in terms of a price target. So over the next 12 months, the highest price target for that right now is $236 a share. So there's still plenty of upside. So I'm paying really close attention to both of these stocks right now as they continue to lead the healthcare sector. And just to see how strong this breakout will be, if we actually pull up the time series of Eli Lilly, I just like to start with the most top-down level possible, looking at the monthly chart, and just notice that this stock has just done absolutely insanely well over the past couple of years. And zooming in here, you can see that we were definitely in a period of consolidation all the way from 2024 all the way up until today. And we actually did put in a new all-time high recently, and that's exactly where price is headed. As you can see here, the last couple of months in a row have been all bullish, which is really good momentum. And I find this chart pretty fascinating because if you look over the last couple of times that Eli Lilly had a pullback to the moving average and then eventually broke out above it and continued higher, you can see that the next breakout lasted multiple years. If we look all the way back to 2020, they did pull back and they'd had, the price just never stopped going up. I don't think I need to explain myself here. This is really when the stock continues to rip much higher. So I think that is a similar pattern that we're starting to see today. And it's definitely backed up by all the Wall Street estimates that we talked about, as well as the fact that they are responsible for selling the best-selling drugs on the planet right now, and they're only expected to continue to grow. So that's going to be a huge tailwind for them. And switching gears, if we go on the right-hand side and look at the chart of Johnson & Johnson, it's pretty much the exact same setup. We have a very strong rally recently, and if we zoom out here on the same weekly chart, they've also been consolidating in a multi-year channel, and that's good because the longer it goes sideways, the higher it could potentially go. And we also have to scroll back in time here to figure out this isn't the first time that they've made a move such as this. So if we go all the way back to around the early 2000s, you can see price consolidated in this channel, and you guys can see as they break out, and once they do confirm that breakout, the stock just really enters just a multi-year bull channel. That's where I'm going to end this video now that we know where Wall Street is putting all their money right now. Hit subscribe to the channel if you want to continue following these setups with me into 2026, and check out the other stock analysis videos, which you can see on your screen now.